What's up, everyone? Welcome to another video. And the market got killed by the Federal Reserve today at the interest rate meeting. You can see right about here when the interest rate decision, the report was released, the market responded bullish. I'm sure a lot of people jumped into some long calls on that thing. And then when Jerome Powell began to speak, right around here, we got a nice little pop, but then it just started coming down in a big way, over 3% to the downside from the high of the day to close. Actually, in after hours, we got a little lower than that. And here's the dollar index. You can see the inverse correlation. Here's when the report was released. The dollar tanked while equities skyrocketed. And when Jerome Powell started talking, you can see the dollar started rallying. Equities tanked. It was really ugly. Jerome Powell did a lot of talking, but essentially he pointed towards the fact that inflation is nowhere near the point they want it to be before they can start slowing. They're definitely not even thinking about pivoting yet. He says the job market is still not where they want it to be either, so it doesn't seem to be any slowing in the near future. December, they're going to probably be talking about some slowing down. I don't see that yet. We got to still pay attention to economic data, jobs data, inflationary data. And here, look at the daily candles on the dollar. I mean, we've had this strong support line, support zone, I should say, that I've been posting in my videos. And we've had several bounces off this area here if you've been paying attention. And wouldn't you know it, the Federal Reserve interest rate meeting came just a few days after the bounce off of this support line. You could have expected this to be bullish for the dollar if you follow technical trends. And when the dollar's going up, you got to be bearish on equities. There's an inverse correlation between the dollar and equities. The dollar goes up, equities go down. Now let's flip over to the 10-year Treasury Yields, and they are definitely bullish off of Powell's comments. You can see this bullish daily candle. It started off red and it flipped to green real quick when Jerome Powell started talking. And if y'all were watching in a previous video, I mentioned how I found this. Well, actually, I should say this support line here. I called it a ghost support, basically. I duplicated this resistance line. I transposed it downward to this previous low to see if we got a possible trend, and it played out perfectly. We got a bounce right here where I was expecting off of my ghost trend line. This little trend line I put here. Check my previous video if you want to see how I found that. But you can see we have 10-year yields following this price channel. I'm expecting it to come back up to this resistance before we can see anything happen, any reversal or friction in price action. Maybe this high, you might get something here as well. But remember, we want to see yields come down to be bullish on equities currently in this macroeconomic environment we're in. I was expecting either a breakdown off of Powell's comments or a bounce, and we got the bounce here. The bounce is confirmed. In my opinion, it's possible that overnight the world markets will digest this information differently. Sometimes you get the whipsaw effect the next day after the Federal Reserve speaks or does their interest rate hike or interest rate report. All right, now we flip over to VIX Futures. If you don't know about the VIX, when the VIX goes up, SPY comes down. VIX is the put-call ratio in the market. When a lot of people have puts, then the VIX is going to go up, basically. When everyone is shorting the market, VIX will rise in price. And throughout October, we've had some pretty good bullishness here. As you can see, VIX was dropping, equities were climbing, and it appeared that VIX was going to break down. It appeared the VIX was going to break down below this trending support level, which would have been super bullish for equities. It's technically the price is still below this trending support level here. If the VIX gets above that, then it's definitely confirming bearishness for equities right now. Might have to wait till tomorrow before we can get that bounce off of this support. This could be a little false breakdown. We could jump back above support here, but you know, the market does whatever it wants. If we see the VIX falling for the rest of this week, then that will be pretty confusing. But either way, we're going to follow the trends, right? Doesn't matter what's going on macroeconomically. Well, it does, but I mean, you still got to follow the price action. So keep an eye out for this VIX bounce to confirm this bearishness for equities right now off of the Federal Reserve's interest rate hike. Now let's quickly go over corporate credit because it appeared like it wanted to go bullish as the price popped up above this purple trend line that just popped up on your screen, that showed that that downtrend was somewhat ending. It looks like the market wanted to go bullish, at least corporate credit wise. But now we have a rejection of the previous highs in this. It looks like we're going to be range bound, at least for now, within this range. You might expect some bouncing in between this here, but if we get a breakdown below this yellow support line that I'm pointing at right here, then that'll be very bearish for equities, as it looks bearish for corporate credit. If they don't want to invest in credit of these companies, then the economic outlook is basically bad in their eyes. So keep an eye on this support and resistance, this range here for, this is ticker LQD, corporate credit. Now we should quickly go over gold. This is ticker GLD. This thing's been on a huge downtrend. Gold's a very good long-term investment in my opinion, so if this thing drops, then it just looks more appealing to the long-term investor. And I was thinking October's bullishness would send gold above this downward resistance line that I've highlighted here, but it didn't. And as you can see by that last daily candle there, it looks like Jerome Powell's comments is going to keep it below this resistance and in this downtrend here. So it's not time to load up on gold yet, alright? That time might come when the Fed stops raising interest rates and the US dollar starts dropping. And if those two things happen while inflation is still very apparent, then gold could skyrocket in a big way. One interesting thing I want to point out is on crude oil futures. You can see this green daily candle here. It looks like Jerome Powell's comments did not spur fears in global oil demand decreasing because of interest rate induced global recession. Oil is still in a technical uptrend. I'm highlighting the support level here to watch. If we get below that, then that would look pretty bearish for oil futures for sure. And I just highlighted the current trending resistance level we need to watch. You can see this little wedge pattern forming here. But oil has had trouble in the past getting above this resistance level. You can see where I'm highlighting these reversals at this resistance. And the price is currently right there at this resistance level. If the price gets above, then I'm confirming the previous bullishness that I called on oil a couple weeks ago. If we reject this resistance, watch for a little consolidation within the wedge before we break out to the upside or the downside. Who knows where we're going to go with this one. Oil price seems to be controlled by OPEC at this point, and they like high oil prices. So as of right now, I'm still liking the bullishness in oil. But that could change very soon if we consolidate in this wedge and break out to the downside. We're getting to the tip of this wedge, so it's got to choose a direction soon, right? And that's basically it for the video. The Fed basically killed the market again, confirmed bearishness after October's really bullish month, right? Like 8%. Yeah, the Fed got rid of that. That's probably going to get erased in a lot quicker than it was made, that's for sure. And once again, guys, if you like anything you heard, if you learned anything, hit the like button and the subscribe button. I would appreciate that big time. And any comments, questions, suggestions, leave those in the comments section. And as always, I'll see you on the next video.